Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And we got a ton of things to go over today, guys. Lots of action in the markets. Again, we're looking at a JOLTS number that will be released at 10 a.m. Eastern Time. Expectations are 8.37 million. Last month was 8.49 million. So we're expecting a weaker JOLTS number. And again, that stands for job openings. Now, again, some key things for today. We're seeing layoffs. Microsoft, Google, both laying off employees. This, again, the question is it related to AI taking jobs, or is it weakness in their business models? That are another thing that we'll have to delve into. All right, on that note, let's get right into the charts. Let's see what we got here. And as we jump over here, let's flip right to the screens, and we can take a look at what we're seeing. So we did see in the overnight a move down in the S&P. The S&P futures trading lower. But notice again, as we've gotten closer to the open, the markets have begun to float back up. Now, net, we are still negative on the morning session. But for the most part, we are looking at a market that generally is still flat to negative, right? Now, the kicker is this, and this is something I want to talk about, guys, is that we are seeing the bad news starting to filter through. Yesterday, the ISM data came out, manufacturing ISM. It was very weak. The markets did not rally on that. In fact, early in the day, we saw a sell-off in the markets. And again, to me, that's starting to mean that bad news is bad news. In other words, investors are starting to realize that bad news is bad for the economy, right? It means the economy's slowing, but the Fed cannot come to the rescue with the amount of rate cuts that the market would want to save the entire system and pump the markets back up and make the economy sound again because inflation is so high. So in any case, we'll see what the markets do today. I think we're probably going to stay sideways into the open and into the 10 a.m. time frame when that JOLTS data is released. Now, if we flip over to the 10-year yield, this is interesting. Again, notice yields are creeping down, potentially breaking our key trend line. Here's our wedge pattern. Notice again, we are coming down right in this range. Could we be on the verge of a breakdown in the yields? And the bigger question again is the weakness that we're seeing, and we saw a big drop in yields yesterday. In the stock market, the NASDAQ was slightly, I believe the NASDAQ was up, S&P was flat, Dow was negative on the day. We really didn't see that big rally that you usually get when yields go down. Today, again, yields are down, markets are down to start the day. So again, they are seeing that kind of change in pace of the markets beginning to not love the weak data, even with yields going down. Looking at the dollar chart here, the dollar is catching a small bid. So again, if we flip over to the dollar chart, the US dollar, again, small bounce here. But just remember that this is a bearish pattern here on the charts. And again, that's what we call a head and shoulders pattern. The downside target calculated out is right down to this level down here around 101.50. And again, a weak dollar implies that, again, the economy is probably weakening and there might be more stimulus down the pipe. All right, a couple other charts that I wanted to go over this morning. If we flip over to the S&P 500, take a look at the S&P 500 on the daily chart. We have two major trend lines that are starting to converge. And what we're looking at here is a trend line that goes back a long way. We're talking about 07, right? So it goes, this upper one goes back all the way to the Great Recession pre-highs, the highs just before the collapse for the Great Recession. And then what we have down here is a trend line that I'm following. So this one right here tells us essentially the trend to the upside in the S&P. If we break this, which is right around 518, if we break below this line in the coming days or weeks, that would be the beginning of a bigger move to the downside. So again, on the SPY, around the 518 level, maybe 519 level, that's the level we are watching. Okay, now again, do I expect this market to eventually roll over? I do. Again, you know, the economic data weakening, the fact that it likely will continue to weaken, the fact that the markets are not rallying on that. We also have instability. The Japanese central bank announced that they may cut back on their bond buying, which again creates more instability. They're trying to figure out a way to stabilize the yen versus the dollar. We know that, again, that's been in this treacherous zone of kind of catastrophe potentially. And I've talked about this before, how to stabilize it, the Japanese central bank potentially would sell U.S. bonds. They're the biggest holder of U.S. bonds. If they dump bonds on the open market, U.S. treasuries, let's say, then you actually force interest rates to actually stabilize and move up. And that, again, is not what the Fed wants. The Fed could potentially lose control of the yields and interest rates. All right, so again, either way, we're in this little pattern here. Again, ultimately, I expect a move to the downside. When it will happen, probably when Nvidia starts to weaken. And that continues to be the case here, folks. Nvidia continues to be the powerhouse behind the market. Now, if we go to this chart here, I think this is kind of an interesting chart. If we bring up here, and I want to show you this. This is the logarithmic view on Nvidia. And again, one of the things that I look for is trend lines that are of importance. And here, if you flip it to the log, now you may say, well, why are you flipping from linear charts to log charts? Well, essentially, log charts are useful when parabolic moves occur, because essentially you don't get a lot of trend lines when something goes so quickly to the upside. In other words, we also see log charts used in cryptocurrency trading because we've seen thousands of percentage point moves in various cryptos, even on Bitcoin, since early in Bitcoin's existence back in 2009 and 2010. One of the things that I came up with here, if we can see here, we have this line here, right? So we have this on the log chart, and it goes right up to the current levels. And then we also have this trend line down here, which goes right through there, right through here, and right through this zone, connects through this high, and it goes right to this level. So for me, at least using log charts, this gives me a basis to just watch and see, does this level on Nvidia hold up? Does it keep Nvidia kind of under pressure, or at least under this 1150, 1160 level? So again, just something for those of you at home that are looking at a chart, flip over to your log charts on parabolic stocks. It is much more useful than linear when finding technical levels. Going to a chart here on Apple, folks. Apple, again, is battling a key resistance line. We can see these two lines on Apple. If we take the previous high right here, we go right through here. We basically are kissing that level as of now. So this is a big level on Apple. I will just mention this, folks. I am not necessarily bullish on Apple because I do look at the macro picture as a weakening issue. But I will say that if you just look at the chart, this move up with this inside bar consolidation, this choppy sideways action, is actually somewhat on the bullish side. If you showed me this chart, I would say, all right, in general, you'd expect a little check back here and then potentially a break to the upside. So again, that's assuming the macro doesn't impact it and cause it to come back down and break lower. But right now, that chart again on Apple is not horrendous. And it's kind of interesting because you could almost make sense for why Apple could break up. If Nvidia pulls back, and this is something I've watched, and I watched this with the Apex Live Day Trading Room over and over again, is that when we're intraday, you'll literally see Nvidia move down and Apple will move up. And then when Nvidia moves up, Apple will move down. And there's this correlation or inverse correlation with money flow. It seems like money flow goes out of one into the other. And so the concept would be is if Nvidia does have a pullback, let's just say running your mill 10 or 20% pullback, does money flow then fly into Apple and cause it to break to the upside? Just a thought there for those of you that like to kind of think about things like that. Looking at SMCI, this is another interesting chart. This actually had a breakdown. We can see we had the former head and shoulder pattern here, right? There's your neckline right through here. And again, we can see that it broke lower. We then got bearish consolidation, right? We know this pattern. You guys should all be aware of this pattern. And now we've broken this trend line right through here. The target of this is down to about $525 on SMCI. And by the way, it probably won't go straight there, but the idea is over the course of the next few months, I would not be surprised to find SMCI back to about $500 per share. And remember, this thing topped out north of $1,200. That would be a really crazy drop. Google, if we take a look at Alphabet, technically it's known as Alphabet, we can see again there are some charts here and trend lines. On a bigger time frame going to our weekly, we are up into major resistance as well. Again, you have a trend line. This upper trend line, by the way, goes all the way back to the 1999, 2000 highs, I believe, or it might be 2007. But either way, it's a massive trend line back here, and we can see again hit up here, right into here, and then we have this low right through here, right up there as well. So there's a lot of resistance on Google up here. Amazon, I showed you this yesterday in trading the close. Amazon is also borderline, not quite breaking down, but you have this channel here, right through here, and then right on this level. If we break here, this starts to see significant downside potential on Amazon, this channel. And you can see how perfect that channel is, perfectly parallel lines. I guess my theme here today, folks, is that we're going over the mega caps. And in the mega caps, again, they've either started to break down or they're borderline breaking down like this, except for Nvidia. And Nvidia continues to be kind of the standout. Now, talking about another one that's already broken down but has retraced is Meta. We can see Meta had the bad earnings drop right here. This was that big earnings drop. It then rebounded, and you can see how it's finding resistance right along these lows. On the underbelly, it's tagging that, and then you have your gap fill right above it as well. So there's a lot of resistance here. Whether it fills the gap or not, I don't know, but ultimately the path of least resistance likely will be to the downside as it continues to march to the beat of earnings, which again were not the greatest. Lastly, just quickly looking at Microsoft here. If we look at Microsoft, you know, this one could be arguable if it's put in a top or not, but the one thing you do see on this is that at least on the monthly, we had this wide range reversal candle, and we have yet to take that out. And so for me, that is a marker until proven otherwise of a potential top here. And also, if we go to the weekly chart, I can just draw on a few trend lines here. There's a very obvious kind of technical level for a bigger breakdown. And I just drew it in right here, guys, and you guys can see it pretty clearly, is going back to January of 2023. Look at the lows right through here. So essentially, if Microsoft violates and closes with confirmation below this line, you would expect a bigger move to the downside. All right, and you can see it's almost like, you know, and again, it's almost like a wedge pattern getting closer and closer right here, right? So we're starting to go like this. And again, path of least resistance likely for this type of wedge pattern is to the downside as well. All right, so just a couple little tidbits there. I do want to go and do our spin of the morning here. So we're going to do our spin. Yesterday it was smart money, commodities, and miners. That was what was won. So again, we're going to do a 3-month giveaway of that service, and we're going to find out today who wins. So right here we're doing that giveaway, and we'll see which one of you guys that shared the stream yesterday, the game plan, are the winners. And Coquet Mate. I think I'm doing that one right? All right, Tim giving me the thumbs up. Beautiful. So congratulations. Reach out to Lawton for 3 months free of smart money, commodities, and miners. That's $300 value right there. And we will do our spin right now to find out what is the next winner. All right, let's do it. Dr. B's course, awesome, amazing. The 1-minute scalpel is an incredible course by our emergency room surgeon here, and he was an emergency room surgeon, now over to trading, as he's come over to trading full time, and he did this course that he figured out. Amazing tactics in this 1-minute scalpel, guys. If you haven't picked it up anyways, it is worth it. I think it's about $299, but this is an incredible course that will blow your mind when you see what he reveals in terms of trading on that 1-minute chart. It is night and day. And again, I never really traded the 1-minute chart prior, but now I absolutely look at it once he showed me what he found in the chart. So we'll give that away tomorrow. On that note, we're going to take 30 seconds to thank iTrust Capital, amazing sponsor here at Verified Investing. Take it away.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust, and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, back to Bitcoin we go, and Bitcoin is creeping up just a little bit. Had a nice day yesterday. It did give back a little bit of its early gains, but again, the bias that we've had continues to be the correct one, at least for now, which is as long as it stays above this line here on a daily closing basis, you remain neutral to bullish, meaning that you should see this curl up like this and make a move higher. Now, again, one of the things I talked about yesterday, which is important, is that if we see this fail and close back in here, the odds are a bullish pattern that fails results in a big move in the opposite direction. By the way, that works for bearish moves too. So if you have a bearish pattern and it fails to break down, or it starts to break down and then reverses, the biggest moves come off of those failed moves. And so the idea being is that right now the bias is here, but if it ever does get back below here, run for cover, because this will be a major failure, and my guess is we would go down to the lower end here, which is around 52 to 53,000. Okay, so just a little, and again, the key is, you may be long Bitcoin, which is fine, and you may say, oh, well, I don't even want to hear about the downside, but don't stick your head in the sand, right? You want to know both sides, and then you make your judgment. You can be long and still know that, okay, as long as it doesn't get below here, this is green, target price up type action. But again, so many people out there, and this goes for investing in all asset classes, they get, it's like, don't tell me anything negative about my trade. I don't want to know. It's not going to happen, And then they get caught with their pants down, essentially, and like, oh my God, I can't believe that happened. It's like, well, you got to look at both sides. You got to know where the price action fails, where it strengthens, where it kind of maneuvers. Okay? Looking at Cardano, I do want to touch base on Cardano today. I saw a couple of you guys asking for that. And again, what we do have, and let me extend my trend lines out here, is there's really some amazing trend line action going on here in Cardano. All right, so I want to just bring this back here on the chart and look at this pattern formation. So what we basically have on Cardano is this flag pattern in formation. The biggest thing if you're long Cardano, what would be most concerning is this level down here, right? So see how it keeps tapping on this lower level here? As long as this area, this trend line holds, it's okay. If this breaks, you get a leg down and the target price is around 35 cents. Now on the other side, what you want to see is you want to see this right here. You want to see a breakout above that level. If you can get basically above 48 cents, 47 cents, now you start to get a breakout that can take you well into the 50-cent range. Now again, the only concern I have is this pattern formation, right? So essentially, this is that pattern formation, and we know that that's generally bearish. So for me at least, looking at this, probabilities, even while it stays within this pattern, probabilities slightly favor the downside, but really until it breaks, you can't be that sure. It's not going to be a high enough percentage where you can guarantee. Like, there's no guarantees in trading, as we know, and so it really could go either way, but it does favor a breakdown slightly on that Cardano chart. All right, next up, let's take a look at gold here. Gold is seeing a small pullback today, but again, the pattern is the pattern, right? So again, look at how many times, by the way, in all of these charts, the patterns are almost the same. It's either the bullish flag, the bearish flag of consolidation. So we just looked at Cardano, which was, what type of pattern was that on Cardano? It was down and then like this, right? And you had kind of this wedge formation. Well, if we look at this, look at the repeating pattern. I mean, essentially, it's the same thing, right? And it's below this upsloping trend line. So I continue just to use that as simply as it is, keeping things so simple to just say, okay, well, if that's the pattern and you're consolidating under this upsloping trend line, then in the very least, probabilities favor a move down to 2280, which was this former low. If we get there, then we start saying, okay, well, what are the odds that it bounces? How much can it bounce? Or does it take that out, in which case it goes back to this secondary level? But again, the key here is, guys, you don't need a master's degree in crazy technical analysis to just have a general bias on any single chart. Just look for the patterns that repeat over and over again and go with it from there. Good example on this would be right here. Here's your gold chart. What type of pattern is this? Right? Upward move, sideways consolidation, building the base, consolidating, winding that spring for the blast off. It's an up move with sideways. The pattern was telling you up. Simple, simple. Okay, so again, and I think this is key, is because I think when people hear about technical analysis, they get all like ruffled and like, oh my God, this is so complicated. You know, when you look at some people's charts, when they show their charts like on YouTube or on these other places, there's a million things on the chart, and it's just like, it's overwhelming. Even it's overwhelming to me. It actually causes anxiety. I'm like, oh my God, you know. But in reality, it doesn't have to be like that. And the key is understanding that you're never going to be 100%. The key is to just get the probabilities to like 70%. 7 out of 10 wins. As long as you manage it accordingly, you should do really well in investing over time using the simple tactics. All right, so what do we have today, guys? We have silver is pulling back a little bit. One of the things I mentioned on silver, so silver has support at $30, which is basically where we are. For me, I'm leaning towards a pullback to 28.50 to 29. You might say, well, but $30 was that big breakout. It should have held support. Well, yes, but it already tagged it right here and bounced, and then it's tagging it again. The more it tags that level, the more I worry that we're going to see a little bit of a decline. Now, again, it's minimal. I mean, in the scheme of things, I'm still net mid to long-term bullish, but for me, at least around the 28, 29 level looks more prominent. I also think that there's too many people that are in the silver trade that think it's like the easy no-brainer breakout here and it's going to go to the moon. And I think kind of flushing out the weak hands, as it may be, could be a good thing to do and probably what is needed. All right, let's go to our next chart here, guys. I want to go to oil because oil continues to break lower. Pretty incredible drop on oil just in the last couple days. Look at this drop. And again, let's just take it simply here. All right, let's look at this. What type of pattern was this? What happened to price? See how simple that is? Look at that. All right, it's just pattern recognition. And what you're really doing here is, remember, there are millions of buyers and sellers here. So when you're trading a chart, what you're really doing is you're trading the psychology of millions of people. So the law of large numbers comes to fruition, essentially, and you're essentially trading the psychology that repeats throughout history. So you could go back to the 1920s. You could go back to the 1950s. The chart patterns are the same, and this is why technical analysis works, is because humans don't change, right? You know, if you go 1,000 years ago, people were greedy and they were fearful, and they were somewhere in between at other times. And that doesn't change. We don't change as humans, and that's why patterns work, because these are millions of people doing this, and we know that when millions of people do this, it tends to mean that it's going to, or their psychology is again going to lead to this drop. So again, just cool stuff. I mean, really, once you get into the psychology of markets, it is pretty cool. On oil, I'm looking at a target of around 69 to 70 bucks in the short term. And then looking at natural gas was actually up a little while ago. It's now starting to pull back. But the key here is just looking at this and saying, okay, well, there's really, to me, there's nothing going on here. You don't have a bear flag yet. So this would not be, and just to be clear, this here is not a bear flag. A bear flag is more in the lower ranges of sideways chop. This is too much of this, right? It's went too high. So just keep that in mind. One other chart I'll quickly show you guys, the copper chart. Copper is getting hit again today. There was a beautiful technical breakdown, but you can understand why copper's going down, right? Economics are slowing. We know the U.S. is slowing. Copper is a major industrial metal, right, for building out wiring and building things. And same thing for oil. With the U.S. economy slowing, demand for oil, plus OPEC said they were going to increase or put some barrels back on the market, it was going to essentially demand is slowing, and slightly more barrels means supply is increasing. So the idea here is that copper, same kind of thought process, it had rallied ridiculously to the upside, was up massively to $5. It's now coming back in. We had the breakdown right here. Now what am I watching? I'm watching for the potential, maybe, I mean, are we going to get like this, right? Well, look right here. What type of pattern was that? It led to the next down. Are we going to do it again? And again, this is too preliminary. 3 candles is too preliminary. It's what I would call an immature pattern. But if we get another couple candles like this, right, sideways like this, now you can start saying, okay, that's bearish, and it starts favoring the downside. 3 candles, not quite enough for me to really jump to the high probability conclusion just yet. But little things like this, again, it is game changing. And I know you guys appreciate it, and that's why I want to continue to teach you guys everything that I know up here eventually comes through in these game plans. Maybe not with all the nuances, which are in the Winning Trader series that I put together, which is 20 hours of everything I know. But still, for being free on YouTube, I do my best to really put value into these and give you guys a heads up. So, as I always say, guys, thank you for watching. Thank you guys for supporting Verified Investing, who I truly want Verified Investing to be what gives us the truth, the not unbiased kind of, this is what the data shows. Let you guys use your intelligence to make the decisions on what it means from that point on. And we just use history to be our best guide. So again, as always, guys, thank you so much for tuning in. I got to get to the trading floor. Have a great one. Come find us at verifiedinvesting.com.